Microvision just exploded 300% over the last 5 days. Is it too late to get into this trade, or is there a way that we can still make money with this? Welcome to the Ready, Set, Trade of the Day for Wednesday, the 23rd of December. Here's the daily chart of Microvision. You can see this explosive move that's gone completely ballistic to the upside. And this represents relatively high risk, though, at this point, because we have a no ape policy here at Ready, Set, Trade. We never ape into a chart which is doing this. Quite often what will happen is the chart will retrace a good percentage of this to shake off all the weak hands before it takes off again. So either we can sit there with a limit order, maybe fill the gap at about $5.50 a share, and that may never happen. So we'll be sitting there with a good till cancel limit order that never gets filled if this thing just takes off from here. Fortunately, we have options. There is a way that we can trade this that regardless of what the price does over the next few weeks, we can still find a way to make profits on this trade and maybe even be paid to buy Microvision at a pullback. Now, the first thing I want to do is determine how much I really want to pay for Microvision. And to me, not to be too greedy here, but it looks like a price point of about $4 a share seems to be about the right price. We could also be a little bit more aggressive, look for something above 5 to 6 in this range, look for the gap fill. Maybe that's as far as it's going to go. But to me, this looks like the right price to pay for Microvision. Charts like this love to come back all the way down and retest their breakout level on the first piece of bad news. So let's go for $4 a share. So again, what I can do is I can sit out there with a good till cancel limit order. I can go out to my trade tab and I can go into the stock price and go ahead and buy. And if we buy, we can set up a limit order down here at all the way down at $4 a share. Now we have to set this for good till cancel to make sure it doesn't expire at the end of the day. But like I said, this order may never fire. The price may never get down to $4 a share again. So is there a way that I can trade this where I can win no matter what happens? Pretty much. What I can do is I can look for the option chain here. The option chain that I would like to pick is probably the 19th February. That is 58 days out. It's a little bit long in the tooth, but I think it'll work just fine for our purposes. We may have to hold a little longer than I want to. So what I'm going to do is called a cash secured put. I'm going to come down here to the $4 strike price, and I can see that the bid price is about 65 cents. I should be able to negotiate in between the bid ask spread, probably getting a fill of about 70 cents. So that's what I would expect based on yesterday's close. And the price seems to have come in a little bit, so I may be able to get as much as 75 cents for this fill. Now that $70 will come into my account immediately as soon as I fill this trade. My obligation is to buy the stock at $4 a share. So every contract is leveraged to 100 shares of stock. So that $70 that comes in based on $400 in obligation means that I can make a 17.5% return on this trade. Now let's go back to the chart and see how this would work out. First off, this blue line here represents February 21st. This is the expiration date of those options. So that is the time limit for those options. They will have no value after that point. So if we enter this trade today, and if we set up that strike price down here at $4 per share, that represents the price level at which things become more interesting. Now remember, as soon as I enter this trade, I pull in $70 into my account per contract. So if I trade 10 contracts, income's $700. If the price ends up going higher from here into expiration, then my obligation will disappear. I keep that $70 per contract, nothing happens. My obligation is released. on the 19th of February, and I can go on and use that cash for something else. If the price goes sideways, same deal. If the price comes somewhat down, even down as far as maybe $4.50 or $5 a share, still nothing happens. It's only when the price comes all the way down here to $4 a share that things get to be interesting. Because remember, I said that I'd be a willing buyer down here at $4 a share. So now I can actually get paid to buy Microvision at a pullback price. No matter what happens, I keep that $70. It's only when the price goes underneath $4 a share that things become more interesting. And don't forget that I did receive that $70. So now my cost basis is down here at $3.30 a share. So it's only if the price goes all the way down to $3.30 do I begin to go slightly underwater on this entire trade. Look at all the different ways that I can make money with this trade. All I have to do is sit on the position for about 50 days. Again, this is called a cash secured put strategy. It's one of the simpler ones that we have at Ready Set Trade. Come join our 10X tribe for more information on this trade. It's free. Thanks for listening, and we'll see you in the next edition.